Hello everyone, and you're watching Bitcoin Bubble News channel. They put themselves in a position where they could say what was a security and what wasn't. I thought there was a good reason why Bitcoin and Ethereum were dealt with as commodities instead of stocks. This is because when you call something a commodity, you can trade futures contracts on it. These contracts let you tame the price, as Leo Millem from the CME put it. As of right now, the reason Bitcoin hasn't responded the way people thought it would after having is that big players are shorting futures and buying the actual ETF. This is called mass arbitrage. That means that most of the money coming into those ETFs isn't really from people buying them. They're just trading to get the difference in price between the future and the spot. Hello, crypto family. That was Mark Yusko telling you how the Bitcoin ETFs are being hacked, which is why Bitcoin's price may be going down right now. In this video, he talks about some new ideas he has had about Bitcoin, where he thinks it will go next, and the future of crypto. I really think you should watch this episode all the way through. Please click the subscribe button. Every day we post new movies. Let's watch this clip and hear what Mark has to say. Like Bitcoin, Ethereum, or even Ethereum. I don't like Ethereum as money very much. When it comes to cryptocurrencies, I like Dash, Monero, and other similar coins, but they are still computers that work all over the world. It's a non-fungible token, or NFT. It's not a monkey JPEG after all, right? Which is what everyone thinks of, but I don't even like the word non-fungible token even though it's right. One of a kind means non-fungible. A token is a record in a book. It's not a coin or anything. That's all it is, a record on a ledger. A blockchain is just a chain of entries on a ledger. But blockchains are different because they are permanent and can't be changed. You can't get to them from one place like you can with a COBOL database or a Visa or MasterCard. They can turn it off if they want to. They could also keep all of our info if we want to store it in the cloud. Or we put our money in the bank. The bank keeps track of it, but it's their money. Yes, that means it's no longer our money. That's what blockchains fix. They let us have things. It was read on Web 1, and it is read, write, and put stuff on Web 2. You can read, write, and own things on Web 3. We can own things with blockchains. So I think a non-fungible ticket should really be called a digital property, right? An entry in a journal is just proof that someone owns a piece of property. It might be a JPEG, it might be a word, it could be a check for stock, it might be a link, it could be any worth. Yes, it could be the Mona Lisa. Not the real painting, but the right to own the painting. But that's what it comes down to. Blockchains are useful for. And Eric Schmidt from Google really put it best. Not only did Satoshi Nakamoto create Bitcoin, but he also made it possible for people to make their own digital assets. What does that even mean? Take a look at it. You know about stocks, right? In the past, you and I would meet in New York at the Buttonwood tree, which is the big tree that is now the stock exchange. We would meet in person and trade traditional items like stock certificates and bills. We had to be close to each other in order to do this. For real, those guys in top hats would steal our stuff. If you've seen gangs in New York on the way to the Buttonwood tree, that's who they were. To keep you safe, the stock exchange built a building and told you to go inside. But you still had to get there. They had a thought to say, you know what, when computers and the electronic age came along, leave the bills in the bank and turn them into an electronic collection of ones and zeros. Put your stock certificates in DTCC and Dallas, Texas, and make sure they have these QSIPs, which are alphabetic codes. You guys can change things. In the old days, people would go to the stock market floor and trade coins. These days, it's only computers. There are no people there, not no people, but almost no people. Okay, that's fine. However, those stock papers must still be in Dallas, Texas. So why? Why not make one-of-a-kind digital goods that are entries in a blockchain ledger? That's the end of the wood age. We went from the analog age to the electronic age to the digital age. Everything in the world, including every stock, bond, currency, good, work of art, collectible car, bottle of wine, private business, and $700 trillion worth of assets will eventually have a place on a blockchain. Everyone will use blockchains to do their work, and people will buy and sell things in the digital world instead of the electric world. Many utility tokens, on the other hand, are not really decentralized, which is their main flaw. Okay, they lead to computers in AWS or Azure. On-chain means on-chain to me. If I want to own something on-chain, It has to be on the chain itself. I think the best way to do that is to show proof of work. In the end, I think Bitcoin has a big advantage. It's like Lord of the Rings, one chain rules them all. Does that mean virtual machines aren't useful now? Not at all. That means I believe proof of stake and proof of